All right, welcome everybody, welcome. Thank you so much for joining us today. We have a super exciting fireside chat. I'm really excited to have three heavy hitters join us today. Before that, quick introduction on myself. My name is George Demooney. I'm one of the partners here on the ventures team at Plug and Play. I lead a lot of our technology and software investments for the firm, and I was really lucky enough to invest in Onfido as well, who will be speaking later today. So kind of backtracking, wanted to quickly give a rough agenda about what we're seeing today in the market. In today's agenda. So first off, we have opening remarks. That's me. Again, George Demooney. And then we have the fireside chat with Saeed Amidi, Hussayn Kassai, and Mike Zappert of TPG. And then we'll have an audience Q&A section at the end, and then closing remarks right at the end. So if you have a question, please submit it down in your chat below. There's a Q&A box. You can chat anytime during the presentations, and then we'll answer those questions towards the end of the webinar. So as mentioned, we have three really heavy hitters today. So wanted to do some quick runs of introductions. Saeed Amidi, who is the general partner of Plug and Play Ventures, also the co-founder and CEO of Plug and Play Tech Center, one of the more active investors in the world and one of the more successful VCs in the world. He did about 1,000 investments so far with 11 unicorns under his name, including Dropbox, PayPal, Lending Club, Guardant Health, Hound, Rappi, N26, and many more. He has over 30 years experience in founding, operating, and growing global businesses all over the world. So Plug and Play today has actually 34 offices globally, 400 corporate partners, again, over 1,000 portfolio companies, 600 people on staff, and it's all attributed to Saeed Amidi. Next up, Hussayn Kassai is the co-founder and CEO of Onfido. Onfido uses AI to verify any government IDs and compares that with facial biometrics. They were founded in 2012. Onfido has grown the company to 400 employees across San Francisco, New York, and London. They raised over $200 million from TPG, Salesforce, Microsoft, Plug and Play, and many more. They work with over 1,500 fintechs, banks, and marketplaces globally to help onboard customers while reducing risk. Hussayn is a WEF tech pioneer, a Forbes contributor, Forbes 30 under 30, and has a BA from Oxford. We're also the same age. I'm not going to say if I'm jealous or not of his success. And finally, Mike Zappert is a partner at TPG Growth, the $12.5 billion growth equity and middle market platform of TPG, the $79 billion global alternative asset firm. Mike leads all aspects of TPG's software and enterprise technology growth investing and strategy across TPG Growth and the Rise Fund. Some of TPG's companies include Box, C3.ai, Checkmarks, Dreambox, and many more. Previously, Mike was a partner at Adam Street, a $2 billion growth equity fund, and Mike holds a BA and master's from Stanford University. So this is going to be fun, guys. We have three heavy hitters discussing tips and tricks, how to grow and operate your business during this time. And with that being said, I will turn it to Saeed Amidi, our founder and CEO.
Welcome, everybody. This is kind of fun. We have had many of these discussions before. I recall I had it initially with the mayor of Houston. How do you change your day-to-day life during this tough times? And then we had it with a lot of corporate partners, because the airline industry has been hurt quite a bit, but some other industries like e-commerce and delivery has grown extremely fast. So then we decided to do a few of our talks around VCs, investor, and entrepreneurs. And I thought Onfido is a great one to start this series with. And I love to kind of Saeed, your perspective, Hussain, during this period. And first, I love that if you tell us a little bit about yourself, a little bit about your company, and then maybe you can bring it to the last 3 to 6 months and how, if you have changed your business focus. Please, Hussain.
Thank you, Saeed, and also George for the introduction, and for Mike for joining. So we started 8 years ago, myself and 2 co-founders. We could see that businesses are moving online, yet they don't see their customers face to face, and that's a big problem. So that there's a need in our eyes for there to be identity verification. And typically online businesses, that's like a remittance platform. Once they integrate us, when they have customers registering and signing up, the customer is asked to take a photo of their government ID and a short selfie video. And behind the scenes, we're using machine learning and computer vision to assess if it's genuine and comparing the person's face to this ID so they can be enrolled and on an ongoing basis be authenticated. So naturally, with your question on some of the things that have changed in the last 3 to 6 months, we, in essence, are a remote identity verification company in an increasingly remote working world. So there have been shifts that we made internally and externally. So the big internal one was that 10% of the company works remotely, and now it's 100% of us are working remotely. So I'd like to think that almost all startups and scale-ups were more agile by nature, and we're kind of used to change. So we're plugged into the latest technologies, communication, and remote working. So although it's tough for any organization to adjust, I think most startups and scale-ups have been able to do it well. And it's become a bit of an advantage where if you have larger institutions that are more traditional corporations which have struggled a bit making the transition, we've been fortunate that we've been able to. And on the external side, we've seen quite a lot of growth, as most infrastructure companies have, as you can expect. The communications ones like Zoom that we're on now, or payments and e-commerce that you mentioned, we're in the identity box. And when it comes to across the world, there are financial services, which is 3/4 of our business, has grown significantly, especially payments, especially remittance. So they're all up based on our forecasts. There are pockets naturally that are not. So we did quite a bit of work around travel, transportation, such as car rental and so on. So there are those that are in some ways halted or at least reduced, but it's more than made up for as far as the significant growth in the traditional clients such as financial services. But there are now new verticals that are starting, and they're small but growing quite fast. There's a few applications around health passports and immunity passports, which we can come back to. But e-commerce and moving to a cashless society is another big drive that comes to it. And lastly, Saeed, you mentioned around telemedicine or online health. That's a big growth area where you got these online health platforms. You don't need to see a doctor face to face. You can do it all digitally, remotely. So that's a bit of an overview.
Thank you so much. And Mike, I know majority of the audience is very familiar with TPG, but I would love that if you talk a little bit about yourself and specifically, you know, what sort of investments you specialize in and what interested you in Onfido.
Absolutely, be happy to. And thank you very much, Saeed and George, for hosting, and Hussain as well for doing the panel. So the quick background on myself. So I've been an investor in tech companies basically my whole career. So I started off in the early 2000s, and I've been investing in software businesses for basically almost that entire period of time. And I joined TPG early last year, really to help build out our tech investing across software and enterprise technology, which is an area that's very core to us as a platform. And TPG growth, just quickly, is about a $12.5 billion platform within TPG overall, which is about a $79 billion platform. So we're, very small part of a very big organization, but we do have a really interesting platform in the mid-market where we can really focus on, market-leading growth stage businesses. And so within, we do a bunch of different sectors: healthcare, internet and digital media, software and enterprise technology, which is what I do, and then business services. But within software and enterprise technology, which is where I really focus, the areas we're really focused on are companies that are, what I would say is helping to create new markets or helping to disrupt existing markets with next generation solutions. And we take a very strong thematic focus as we're making our investments, looking for companies that we feel like are really bringing next generation solutions that are very hard for the existing companies that are out there to counter. And one of the things that's most interesting about this space, and we really spend a lot of time within the identity authentication space is, as part of our thematic approach, is, we really do believe that Onfido has built a very interesting next generation solution that enables a whole range of, capabilities and applications that are really just not possible without this type of technology. And as, the world is moving towards more of a distributed, approach to work and to actual just general life, having these types of capabilities is a very important thing for banks, for financial institutions, for fintechs, and increasingly for B2B software apps. And so for us, we saw a lot of the things that we like to see in our investments. And, some of the things that we look for are companies that are growing quickly. We're actually fine with companies that are growing quickly, but burning capital to do so. But ones that we feel like have a very large sort of addressable market that they can go after over time. And as we did our work, we became very convinced that this is a company that can be very, very disruptive and a very long-term player in the space. So that's a quick background on myself and a little bit on why we're so excited about partnering with the team at Onfido.
And then maybe I stay with you, Mike, for a little bit. If you of our really great companies like Onfido, because we are such an early investor, and I would say you guys are, like to write big checks from what I know. But lately, like one of our portfolio company, Hippo, just raised $150 million. And another really great company in this space, Customer, raised close to $100 million. Have you seen the funding change? Or let's say, are you guys able to source great companies like Onfido and do your due diligence? What has changed in your world as far as the number of investments or, frankly, doing the due diligence?
Yeah. No, happy to. So when I started, I would say that the later stage and growth equity spaces for B2B tech companies were less established. It was an earlier market. It was less proven. There were fewer players out there, and as we've seen just a wave of very successful companies scaling up over the last decade or so and becoming public companies, and as you look at the SaaS market, as you look at the security market. In general, there's just been a wave of very successful companies that have achieved really interesting public market exits or, M&A exits. That market has developed quite a bit, and it has become far more sophisticated. And so the big thing that we've seen is that there have been, more entrants into the market, especially at, I would say, the stages of the, $10 to $100 million check range. That's a part of the market where you have a lot of, traditional venture funds raising growth funds. You have a lot of folks moving into the market who maybe haven't had as much experience in the market. Where we tend to play in the $100 to $250 million range, I don't think it's as sort of a crowded of a space. There's fewer players in that part of the market. And I think the capabilities that companies are looking for at that stage are ones that we feel excited that we have an interesting sort of set of capabilities to serve. And it's in part because we're part of a larger platform. So we do have the ability to help those companies post-investment across operational resources and helping them with future M&A, et cetera. But in general, I would say that the overall market has moved from one that's less sophisticated to more sophisticated and less crowded to more crowded. And so the important parts are having, a really interesting value proposition for high quality companies to work with you as opposed to work with others in the market. And, that's kind of how it led us to Onfido.
Wonderful, Mike. And Hussayn, we pride ourselves that we have over 150 financial institutions, banks like BNP Paribas, Caixa Bank, Deutsche Bank, US Bank, and many insurance companies are member of Plug and Play, and more they have to provide their services online, even acquiring customers for the first time online. Can you tell us a little bit of your journey in the banking world and maybe a little bit of insurance product that are sold online? And then also, Hussayn, I would love to know, you know, us or TPG pride ourselves in being more than an investor, helping you with connections and contacts. I'd love to also learn how, you know, what TPG has done for you or what is going to do for you, and how do you look for an added value investor? Big question.
Absolutely. So where we started 8 years ago, the first use cases were mostly trust marketplaces, home sharing, car sharing, and things of that nature. It was the early days of actually the on-demand space. So a nanny or a tutor or cleaner coming to your home. And these early platforms, they had no way of seeing you face to face, and trust was necessary. You can't have a nanny come to your home and as a parent, you don't know if they are who they claim to be. So those were very much blue ocean and first wave use cases where the customer experience was important, where giving access to many people, if they're migrant workers with different ID types, still being able to onboard them, and most importantly, stopping fraudsters and stopping bad actors all in there. So that's what we built with. And then 2 years in, which goes back 5 or 6 years, that's when the first fintech wave came to be. And we're lucky in the timing, because what the things that we focused on were the things that mattered to them the most: high conversion, fraud capture, and customer experience most of all. So we started with these online payments, banking, and remittance, and so on. But given all the activity that is going on, the mainstream institutions, the mainstream banks still carry the lion's share of the activity. So we also at that time got pretty fortunate in that these mainstream institutions and banks, they kind of saw that the smartphone generation were just no longer signing up the way they used to. And then they looked to all these innovative and fintech companies, and they saw behind the scenes, there are just a dozen or so companies that are powering the ability for these fintechs to scale. So we play in the role of the customer onboarding and authentication side. There's others for security and behavioral monitoring and so on. So by being plugged into these, what are seen as innovators by the mainstream institutions, we indirectly were doing great marketing because they slowly started coming to us. And when the mainstream institutions came to us, those typically took a bit longer to integrate and go live. But once they did, it kind of became a benchmark for the other large mainstream institutions. And that's why we've been able to be quite fortunate and do so well. So when it comes to your second part around value add investors, I see both Plug and Play and TPG as value add in different ways. So when we were lucky enough to get your investment, say a good 4.5 years ago, that was just at the point where we were looking to launch in the US, and recognition, network, distribution, and all those things mattered. So a big part of the value add, if there was one big thing, there are many, but of the big one, it was with some of your team connecting us to some of the largest corporations across the world, many of which we are still engaged with, and a fair few that we've converted as clients, is to short circuit that route. At the time, we didn't have a very large growth or sales function. It kind of was incumbent on me or a few colleagues that we want to present to executives, and we were able to do that because of some of the work that your colleagues were doing. So the key value add was exposure for us, and in many ways, distribution sales that came through those instructions. And if we fast forward 4 years later, essentially what we got to in the early part of this year, about 4 months ago, when we were lucky enough to have TPG join as investors. The big thing now, in essence, of the many, but the one big one is execution and you could call it sales, specifically global, but also specifically in the US. And when it comes to operationalizing some of the progress that we had made, we'd shown that we had a very strong brand, especially in Europe, and we were making good progress. The technology is very strong, but it was pretty obvious and clear that we weren't achieving what we could achieve in the States in terms of our numbers and what the potential was. And we also showed that with relatively little marketing spend, we've done quite a bit. So that and this is the whole point of a partnership and the synergies that come with it, if we were to take TPG's playbooks, expertise, sales execution, especially in the US market, with our strong technology and what we've been able to prove in Europe, you kind of have a good match. And this pattern is amongst other companies as well, where you have strong technologies in different parts, and you need really great execution on sales and marketing, especially in a tough market like the US. And I would call it tough, given the competitive dynamics, given the cost and expense of doing it. You can't, this is a race, right? It's a competitive race. You can only have so many goes before you have to make it work. And if there's one last thing to say is we've made really strong progress with the mainstream financial institutions in the US, but our aim is to essentially become the market leader. And to do so, these financial institutions want to see that you not only have a US presence, but you have large, well-known US investors and so on. So in the early days, the plug and play brand, given that it was so recognized, helped. And now in the later stages, TPG is doing the same.
Wonderful. And Mike, sticking with the same added value, investor, I know that, for example, Andreessen Horowitz has a very big team helping their portfolio companies do business development. I know that, Sequoia and KP play a little part in that as well. How do you help a company like Onfido? And I know that you're on the board of Onfido. And let's say 2 years from now, what would success look like for your portfolio company?
Yep, absolutely. So a couple of thoughts. One, and actually just to Hussayn's point earlier, just around kind of what we saw when we were doing work that was really interesting, and then I think it ties in nicely to kind of how we can help, is one of the things we saw was Onfido has the best brand and the best product feedback out there. The brand is super strong in Europe, but it's not as well recognized in the US. And so we saw that there's a really interesting opportunity, through some ways that we can help to get the company further deployed and in front of customers and in front of market folks in the US. And that's one of the areas that we can really help in, because we do have a built-in operational team. Because we're part of this larger organization of TPG, we have about 70 operating professionals that are on staff, and they go across areas like software pricing, packaging, channels, marketing, partnerships, sales and marketing execution, et cetera. So it's a whole range of areas where we've been very closely working with Hussayn and team on the Onfido side of things to help across a lot of different areas in terms of bringing some of the operational experience and expertise and hiring that we have done and bring that to bear to the company. I would say that it's generally a trend in the market to provide those types of resources to companies. I think it's an important thing that we can do that is more unique in the market, and I think really important for our companies, because we can actually help in terms of on the ground resources to help our companies to scale up and help benefit from the experience of operators who have done it before, have the playbook, et cetera. And I think that's something that's really, really valuable from the perspective of our companies. And I think, Hussayn and I have had a great opportunity to work together as we've been implementing this over the last couple of years or last couple of months. As it relates to, 2 to 3 years down the line from now, I think the really interesting opportunity for Onfido is to continue to become the leading player in this space. We think it's a very big space, and we think they have a very unique product advantage and market positioning advantage. And that's part of why we wanted to be a part of the Onfido story and why we're so excited to partner with Hussayn and team. So as I look back, the number one thing I focus on is, have we become the, most important player in a market that we feel like is a large and growing one? And if we've been able to accomplish that in the next 2 to 3 years, then that's, you know, I think Hussayn and I and others around the table are all going to be really happy at that point.
That's great. That's great. And I will be happy as well.
Yes, exactly.
You know, it's, we usually invest early, but with Onfido, we like the company so much that we have done our pro rata continuously. And in fact, the last pro rata we did it out of a little small fund. We call it our retail fund that, you know, the early investments, we do it out of like almost plug and play venture. But nowadays we will have a few funds on top of our portfolio companies for follow-on. But let me ask Hussayn, you know, I happen to work with N26 in Germany, but I believe you might have worked with their competitor in London, if I'm not mistaken, Revolt. And nowadays we are actually in Barcelona helping Caixa Bank with their product called Imagine. You know, it's like exact competitor to N26. How do you see this online purchasing power of the younger generation cross, especially during nowadays that we cannot go to the bank, to the older generation? And have you seen a big change in Europe or in US in the you know, the age of your clients?
I think, broadly speaking, the digitalization journey started. It's been more than 10, 20 years in the making. It's just accelerated in the last 6 months. And in many ways, we all have relatives that maybe weren't used to Zoom or Skype, and now every other day they want to call you, and you have to say sort of, I'm at work, but can't wait.
Every day.
And so once people try it, it's really difficult to move away. It's like when you go to a smartphone, you can't really go back to an analog phone. And the closest thing that I've seen is, or I remember, is maybe 12, 13 years ago when we first went into supermarkets and there was a self-checkout till. And at first we thought, what is this? And it was a little bit annoying, and we were happy to queue up longer to have like a human process. But now most people actually prefer the self-checkout tills. It's faster, fewer queues, or shorter queues, and then you know what to expect, and you basically check out and leave. So in a similar way, because we've as a community, those who are later adopters have now had to start adopting, and more often than not, I'd suggest when they're trying the digital things, they see the convenience benefits and the user experience benefits. And one of the things that's happened as far as the fintechs or financial services that have been offering these more customer-focused, better user experience services is that they've been kind of tweaking their services to become quite scalable in the last 3 to 5 years. So at least the front runners, the Revolut and N26, the examples that you shared, they have been able to prove that they're highly scalable. Nubank is the same sort of in Brazil and other places, where now that they've proven that they're scalable, it's kind of perfect timing for them to be able to absorb these later adopters. Because even for all of them combined, they're still, although they're large and they're growing fast, they are still tiny compared to the consumer base more broadly. So I think this trend is only just started and it's going to accelerate and continue. The COVID-19 need to work and do things remotely, it just shortens that adoption journey, which for them in many ways is, I'm sure, a good thing.
Wonderful. And Mike, you know, I mentioned, you know, mobile banking, it's now very well established, but like in N26, we also had a 150 million euro check from Allianz in the company. And we kind of felt that primarily is to sell other products to the same customer base. Because banks traditionally been distributors of different life insurance and different type of investment vehicles. How do you think the world will change because of this extremely fast people coming on board on this digital ride? I think like the innovation and digital transformation, it's gone through an incredible change. But how much of it do you think it's going to stay? How much of it may go back to previous to February, March?
Yeah, I mean, I think, you know, one analogy is probably e-commerce, where, you know, that's just been a secular trend that we've been watching for a very long time. And it's kind of gone from, you know, 0% free Amazon to 16% where we were before COVID. It's now surged to 25% in COVID. And so, you know, at some point, maybe that recedes a little bit, but it's kind of like a little bit of an afterburners on the market, you know, sort of adoption and trend towards people doing things in a new way, much to Hussain's point around self-checkout. And so I think as people get habituated and used to doing a lot of things that they used to do offline in an online fashion, and then the efficiency, and I think importantly, how much better the sort of product experience is for the user, and the things that you can do that you couldn't do offline. I just think that those things tend to change, and it takes people being almost forced to do it because of necessity to kind of push us from, I would say, the earlier stages of adoption to kind of the more larger part of the market. And I think a lot of these types of things, you're seeing that. As it relates to, neobanking and next generation banking services, I would say that space also is going to see nice tailwinds. I think we're seeing it from our, work with them in Onfido, but just in general. And we also have another play in that space called Varo Money, and then another one called Acorn. So we have actually a couple different private companies that have exposure to the space. But I think what's interesting about them is the digital first approach allows you to build a product that has none of the sort of baggage of a legacy infrastructure. So if you think of a bank, the bank has branches, they have people, they have, underwriting, et cetera. You have to go there to do stuff. You can get a mobile app, and it's fine, but it's not particularly great. When you then bring these technologies to sort of a next generation application that's just designed to delight the consumer, that tends to be a pretty interesting, value proposition for users. And so I think the necessity of being outside and not having an ability to go into branches, to Hussain's analogy earlier, has kind of forced people to take a look at some of these services they might not otherwise do. I think what's interesting for Onfido is that we can help to power that, both for the existing banks, but also next generation banks, and power that journey. And that was part of one of the things that got us very excited, was the feedback around how the product that Onfido has can help enable those types of experiences.
Yeah, even like especially in e-commerce, everybody talked about omni-channels and, offline, online. But realistically, when you have digital only or digital first, you take out a lot of legacy costs. And, long term, I really don't know if the traditional banks can compete in some of the basic services that the, digital bank can do. And again, we all are excited to be part of Onfido's journey to navigate through these opportunities and challenges. If I can go back to you, Hussain, you did a really good job saying what you have changed internally, from 10% of the workforce working remotely to almost 100%. I was wondering if you could point out to us what are your biggest opportunity now and what is your challenge now?
By all means, so internally, there is an opportunity for us to, as a company, as a team, consider what things are important and what things aren't, especially if you're confined to just working from home and you can't see people face to face. You might have shorter meetings because you're only going to focus on what you need to do. And you might be able to cover what would normally take you 8 hours of work plus a couple of hours of travel in 6 hours. So the efficiency on balance has grown, and that is a strong opportunity as a company to be able to do a lot more and deliver on our mission and goals faster. But the risk is, it's not remote working or working alone isn't for everyone. Like I know, I'm sure the two of you you're the type that like you were at events, we're outside, we're sort of in an office and so on. So for some of the team, especially given we have younger team members who this might be their first job, a risk is that they don't get the right balance, and that can lead to burnout and other things, or that it may be hard to be mindful of other people as such. So we've done some work around just sharing best practices. Like if you have to be mindful, maybe your team lead is also a working parent and maybe they have kids now to look after. So you might need to, instead of having your 1 p.m. one-on-one, you might have to do it at 6 p.m. or whatever it may be. And that kind of, in some ways, although we are working remotely, we've had to be more understanding of each other and learn a little bit more. So the risk is when you miss out on those things, but it can be an opportunity if you start learning, bonding together, and more effectively as a team. And if I just, before I forget on this last point around N26 and Allianz and others, if the more interesting trend has been that this goes counter to what the strategic books have said you do for a long time. Not all, but the majority of the business books and strategic books and the discourse has been pick a niche, focus on it, and double down on it, right? Just payments, just remittance, just banking. What these new examples are showing, take Revolut or N26 and others, they don't just do one thing. Revolut isn't just online banking, right? It's crypto, it's trading, it's remittance, it's a whole host of things. And Amazon is a sort of a long tail and growing of things. So what it seems to be is that if you are able to, if your core competence becomes a brand and you develop that customer trust, then there's potentially no end of what you can't do, which is going to probably lead us to see more super apps like you have in China, where these front runners being able to offer a whole host of different things. As long as it builds that trust with the clients, they build that relationship, and obviously there's an identity and compliance thing that's done, then they can have a unique advantage on offering additional services in a more effective way than their competitors may be able to.
Wonderful. And Mike, what is your thoughts about the biggest opportunities that are out there and, challenges for a company like Onfido or, other portfolio companies you have? I remember Sequoia, for example, put like a big scare out in March 15th, I think it was, save cash, reduce cost. Quite frankly, it was a lot of our startups are doing really, really well. So we didn't think that panic was the right thing to do. But how do you see the opportunities and challenges going ahead?
Yeah, so just on the work from home side of things, I think we're also seeing to your earlier question, we're also seeing a very similar dynamic where our younger staff and team members have a little bit of a harder time adjusting to it. And then also a lot of the sort of in-person dynamics of going, and a lot of our jobs is meeting people in person and going out and networking. And so that part's a little bit harder. What I do think is really interesting is how quickly the business world has moved on to Zoom and other types of remote collaboration technologies. And I think, if you just think about, a few months ago, pre-COVID, getting to have a first meeting by Zoom was a little bit of an awkward thing to do. You'd kind of either want to do a phone call or want to do an in-person. And now we're into a world where you just jump on Zoom and that's how you do it. So I think it relates a lot to, where the market is heading as it relates to tech. And also I think a lot of the tailwinds that we've seen in COVID are ones that I think are going to be pretty durable post moving back to normality. And so, I would say that in the sort of March and April timeframe, I think we were all very, cautious and wanting to make sure that we, had good cash runways, making sure that the businesses were well positioned for an uncertain, future from a sales and marketing perspective. But when you look at how most of the companies in the public markets have done, and also in our private portfolio, within tech, generally April was probably the worst month for most. And pretty quickly after that, in May and June, things have recovered pretty quickly. I think part of that was due to just the customer set. The first month of a quarter for most people, that's their first month of their quarter is generally one of the worst months. But then secondly, from an inter-quarter seasonality perspective. But secondly, I think a lot of the customers that we're selling to in our B2B companies, they're having to adjust to the world of working remotely, working on Zoom, getting their systems and processes up and running. They kind of did all that work. It was a bit of a surge to do so. And so buying things, even if you wanted to buy it, even if it was an approved product, generally wasn't the sort of top of their agenda. But now that everyone's kind of working from home remotely, gotten used to everything, I actually think that the B2B buying behavior is back to normal, and it's actually even accelerated. The other interesting thing that's happening is because you have less of this time spent commuting, time spent going to meetings, time spent flying places, and the slack time, I would actually say that the pace of business is accelerated, and the ability to get to an answer on a particular business question or purchase decision, et cetera, has accelerated. And so I actually think that part of why tech has done so well is because it's playing an enabling role for this new kind of world that we're living in, but it's also easier to make decisions than it was 3, 4, 5 months ago, because you can just get people in the room much, much more quickly. And we even see that from an investment perspective. Our investment committee process is probably more efficient now than it was before, because we just all jump on Zoom, we talk about stuff, and then we make a decision. But you don't have, this person is flying there, this person is going there. And so as a result, it's just a much more sort of shorter cycle. And I think that has a really interesting impact in terms of business, but also importantly, tech.
Yeah. One of the things that we struggle with, we were on a very fast growth curve. And during the last 3 months, we opened 3 new offices, in Osaka, Japan, in Fargo, North Dakota, don't believe it or not, for agricultural tech. We have had a hard time onboarding people, because it's really hard to transfer culture on Zoom and train people on Zoom. How has it been, Hussayn, for you, hiring people, onboarding people, training people?
Not easy. So we've continued to hire. So we're hiring in different parts of the company. And so holding to that has not changed. If there is, despite unfortunate circumstances, the one upside is that there are more people now looking to join startups. And so there's greater availability, because as you know, this is all about talent, and it's the toughest thing. So an upside is more availability, but the downside, as you say, is you have them absorb into and immerse into the culture. So it's not been easy, and it's still early days. So a key part is the interview process becomes even more important. Are they a cultural fit as best as possible at the outset? And so we have a competency framework of them being a fit in terms of their skill set, but also a cultural fit. And that is just as important. We've got our 5 key cultural traits that we focus on. And then once they are enrolled, then there's a whole question of the onboarding process and having a buddy system and trying to do whatever we can. And the last thing to say is that we are starting to have, in a more of a self-serving way, those smaller pockets of teams can now schedule a time, meet up at a park or elsewhere. We pay as and where, there's an event going on, for them to have more smaller gatherings, for them to get to know each other a bit better.
Thank you so much. And the same question to you, Mike, and then I turn it to George for some of the audience question.
Yeah, no, it's and actually our new crop of this year's associates started, I think, last week, and it's a key consideration for us, in part because, to your point, culture is really transmitted through those small exchanges, those bumping into people in the hall. It's sitting next to somebody in the next cubicle, watching them do a particular model, particular analysis, how they do a particular call. And so we generally have what we call a ride-along culture, where we try and get people into meetings. We try and have our junior folks join us for as many sessions as possible. And so we're doing that as much as we can from a Zoom perspective. And then for our incoming associates, we're having them staffed onto deals side by side with another associate, so that they can work alongside them and see what it's like. it's not perfect. And I think the longer this configuration goes, the harder that challenge will be, because, you know, if we're a year from now and still in the same situation, you know, you're going to have a graduating class that will, you know, potentially never have been in the office necessarily. So I think we do have a lot of work still to do on that.
Wonderful. It's great having you guys. And George, go ahead, please.
Yeah, we have some great questions.
Thank you.
And what an amazing panel. Thank you guys so much. So some exciting questions from the audience. One for Mike. We'll start with you, Mike, on return profiles and liquidity in this market. Has that changed hitting COVID for TPG? Maybe the first question would be, what does liquidity look like for, you know, these very high growth companies in terms of, you know, hitting the public markets or private exits and whatnot? And then the second one is, what kind of return profile are you looking for when you're investing in a company like Onfido?
Yeah, so I'll talk more, maybe not TPG specific, but more generally about the market in general and what we're seeing. You know, I would say that, you know, if you remember, and Hussayn remembers this because we went through this experience together when we were doing our diligence, you know, the public markets went off a cliff for about a 3 to 4 week period of time where they went down, you know, almost 30% peak to trough, and then kind of recovered very quickly and have done well since. But there's a period of time where, you know, we were all thinking, you know, Saeed, to your earlier point, that, you know, we were going to have to batten down the hatches and the world was going to be quite different for the next couple of years. And, you know, very quickly the public markets recovered. But interestingly, the tech markets have recovered even more quickly than anything else. And I think part of it is just generally a move from public market investors from, you know, what they perceive as more exposed to COVID areas to less exposed. And tech and healthcare are obviously both, you know, less exposed, but in some cases seeing secular tailwinds driven by this, as evidenced by things like Zoom and other things like that. And so, you know, that I think that is making tech an interesting space. The other sort of negative effect of that is, you know, the valuations in the public market, or at least for folks like us who are investing in new companies, you know, the valuations in the public market are you know, the highest levels that we've ever seen from a software as a service perspective in terms of the multiples that you're seeing in the market. And so, you know, that often permeates down into the private markets as well. And so, you know, our perspective is that that's a good thing in terms of achieving liquidity, getting companies public. And, you know, we are seeing companies going public where I would say if you asked us back in April or so, would there be IPOs in the rest of 2020? I'm not sure we would have seen that.
Amazing. Thanks for the answer, Mike. Question from the audience, open form question. Certain sectors like travel and leisure have been so badly hit, like cruises, travel, and so on. Would you postpone a launch of a virtual roadshow, or would you push ahead? Second part of that question is, please describe the first 3 steps you would take to approach investors.
So I can start. I mean, I think, you know, in terms of, you know, it obviously depends on company to company, but in general, you want to be going public when, you know, things are going well in the business and the macro you're going after. So if a particular sector is challenged, or if your company is particularly impacted, I think that's just kind of a binary yes, no, in terms of whether that makes sense. Then I forgot the second question, so.
The second part was, please describe the first 3 steps you would take to approach investors.
Hussayn, do you want to do that, or?
Sure, why not? So when it's, I presume on the virtual roadshow, it's like an IPO one, not getting customers.
Yeah, that's what it seems like. We can clarify later, but yeah, let's target the investor side.
Investor side. So when it comes to, I have to say, my strong preference is for it to be face-to-face. I think Mike was good enough to come over maybe 2 or 3 times during the whole process.
I think it was 4. I did 4 in the month of February. So I took up residence in London.
And the point is that really, what founders are doing is they have a promise and a vision of the future, but that's all it really is. It's like a promise. There's some traction and some evidence around what the good work that we've done, but the big thing is you're buying into potential upside. And to do that, there's something about being in person, and that helps. But the good thing is this is all relative. So whoever's pitching for investments, relatively, everyone has to do it remotely now, on balance. So it's to take time to speak with the senior decision makers and the partners where possible. it means your deck and your presentation, everything has to be extra polished and extra flawless where possible, getting design help and others to make it super clear, super simple. And the third is to explain. You have to make it relevant for this age of A, why you are more relevant now than before, and B, how you are going to be opportunistic. Well, you play with the cards that you're dealt with. And given what has happened, how are you going to adapt and be even more effective moving forward? So talking to senior decision makers, making a presentation even better and self-explanatory. And third, pitching and presenting how you're relevant and not, pretending as though COVID-19 isn't with us.
Amazing. I think one thing to touch on that, especially at the early stages, when you're pitching to investors like us, is getting the investors to know your vision and having that vision kind of infectious in the room. You want investors like us to want to be part of your journey and have the feeling of, like, I need to join this company. I need to be part of this journey. They're convincing me that they know better than anybody else. They're poised to take this market, and we want to invest and be part of that kind of like infectious energy. So having that passion is super, super important, at least for me, when I'm evaluating a potential very early stage investment opportunity without much, quantitative metrics to go off of. Great. Question for Hussayn. Hussayn, what are some of the new types of customers you're going after, especially in the last 3 months?
So we have, and it's actually with TPG, we have an exercise. We have about a dozen different streams. One of them is segmentation of verticals, and that includes new verticals that have been untapped in the past. It's just an example of working together and essentially exploring how things can be improved. When it comes to, so beyond the natural course of business, if this is related to COVID-19 in particular, the three things are, one is health or immunity passports, increasingly becoming relevant. So you have a presentable proof of your health status to give a yes or no if you want to fly or go into a hotel and so on. The second is e-voting is becoming more relevant. The elections are 90-something days away, especially in the States. So it's more around how could it work if there are small places where this can be done in a small controlled way, what it might be for future cycles, not necessarily this one right with us. The third and the biggest one, though, is the move towards a touchless society. So we've had the cashless society in the past. A touchless society is one where you don't have to go and check into an iPad anywhere or touch a building as you want to gain access, or go and use train tickets to go into a train station and so on. So that is around you having your identity tied to a device like a smartphone, and then being able to more seamlessly access checking into a train station or checking into your actual building at the office or at home if you live in an apartment block. Those are some of the new things that we're now pursuing.
Amazing. Thank you. All right, question from Lana. Well, first off, she said awesome talk, so thank you, Lana. What advice would you give to job seekers during these tough times, especially those who come from fintech, e-commerce backgrounds?
I would say my quick take is I think tech and fintech are great places to be focused right now, because I think those are areas that are seeing actually tailwinds more than headwinds. I think my general sort of advice to folks in my network when they're looking for roles is, the more mature the company, the bigger it is generally, while still being a startup and still being, interesting. Those tend to be really interesting places to focus on, because they tend to have a lot of roles they're recruiting for. They tend to be growing at a high rate, adding to their team. And so those tend to be the most interesting ones, especially if the sort of funding market is a little less certain. And I would say that right now the earlier stage market is active, but it's less active than it was at the beginning of the year and pre-COVID. Whereas the growth stage, after kind of a little bit of a relatively lull in, say, April or May, it's very active. So the companies that are doing well are getting funding. They're generally closer to profitability as well. And so I think those are probably pretty interesting areas to be spending time on.
Great, thank you. Okay, one last question. I know we're running out of time here. We got the splash slide up. Question for Saeed is, what advice would you give to entrepreneurs now starting their businesses for the first time?
I personally think it's the best time to start a business. You can recruit, as Hussayn said, great talent. Everybody used to compete with Google and Facebook and Twitter, but right now you could build your team. It's a little bit harder to build your culture but I think it's the great time to build your product and test it. I think it's the best time to start a company. And then the next thing you guys should do is call George and me. That's the second advice.
Amazing, amazing. All right.
Thank you so much, Hussain. Thank you, Mike. Thank you, George.
Thank you all so much. I
Thank you, everyone.
learned a lot. It was an amazing talk. Really, really appreciate it. Thank you all so much. If you guys enjoyed this talk, please stick around. We have an NPS survey after this. So please vote what you guys thought of the survey. It should be coming up now. And we'd love to do more of these. We actually have one coming up either September 1st or 2nd with Asaf, the founder of Hippo, on how to raise 150 million in a pandemic. So please join us for that. Again, Hussain, Mike, Saeed, thank you all so much.
Thank you, guys.
Thank you.
Thank you.